Welcome to the Evolve Voices podcast, a platform to hear about the fascinating stories behind the people that power global commerce. I'm your host, Jade Maravillas, GTM advisor and the Asia and Europe host of Evolve Voices. Today, I'm joined by Stuart Thornton, an experienced fintech leader, startup founder, and my former boss at WorldPay. Stuart has spent decades shaping the payments landscape in Asia, from leading sales at WorldPay APAC to founding Hoolah, Southeast Asia's first buy now pay later platform, which was acquired by Shopback. Now he's the Chief Revenue Officer at Credilinq.ai, a B2B buy now pay later startup and an active advisor to fintech startups across the region. In this episode, we dive into the evolution of payments in Asia, what makes the region unique, and where the next big opportunities lie. But beyond that, we explore Stuart's transition from corporate roles to founding a startup, the highs and lows of scaling Hoolah, and the lessons he's applied to both his advisory work and his leadership at Credilinq.ai. We also discussed the state of buy now pay later, the rise of embedded finance, and what's next for B2B payments. This was a fascinating conversation, and I hope you enjoy listening to it as much as I did recording it. But for now, here's Stuart Thornton. Hi, Stuart.
Well, hello there. How are you doing, Jade? Lovely to see you.
I'm good, thank you. So it's good to be reconnecting for the last few months again.
Always.
So Stuart and I worked together many moons ago when we were both at WorldPay, and he was my boss, and he was a very good boss. And I would say a bunch of people would vouch for that. And there's one saying that he used to say that has stuck with me, which was, "Don't leave any stone unturned."
Still saying it.
Yeah. So we learned a lot from working with you. Before we start, maybe walk us through your background, because as people can tell, you're not originally from Singapore. You're originally from where I'm sitting at the moment.
That's right.
Then a little bit of a switcheroo here.
Yeah, absolutely. I don't know how much you want to sort of share, but I'm originally from somewhat close to you, so a little bit further down or further east. I grew up in Southend-on-Sea, which is part of Essex, which if you've watched the TV programs, you know a little bit of what it's like. It has both fame and infamy, I think, at equal measure.
You don't look like or sound like you're part of Towie.
No, that was sort of kicked out of me, I think, at an early age. But I had normal childhood, work-wise, studied business. I think I had that as an intention because I didn't want to commit to anything at the time. I wanted to keep my options open. Went off to college. My first job was actually in a what are they called? Sort of graduate management program with Heinz. Interestingly, I was in the FMCG space at least for 12 months. Actually, ironically, focused in the IT space, which perhaps set me on a course of sorts into the tech space, although very much not touching anything to do with technology myself, because I think as most people that have worked with me to attest, that technology and me don't get on very well. But it's always been quite interesting to see how it works and how you can apply it and how it can create value. And then I had the good fortune to go on to another graduate program after leaving Heinz with a company called WorldCom, which also had some fame and infamy in equal measure, where they went into Chapter 11, not too far off after the Enron debacle. But that was incredible for me because it gave me the opportunity to work in marketing, in finance, in engineering and sales, which is ultimately where I sort of put my hat down for most of my career. And that took me off into the Netherlands, to Ireland, and ultimately to Australia. I became an Australian whilst being down there, but got the passport, perhaps not the accent. And after a few years there, I was moved to Singapore, and that's where I've been for the last sort of 16 years. And telecoms was the main thread, which I think we also sort of shared a little bit of background in as well. But then ultimately went into WorldPay, again, sort of working with you, and enjoyed that very much as well. Thank you for the kind words. So WorldPay was the place where I sort of ultimately got into payments and fintech, which was much more sort of exciting, I think, than telecoms at the time. I think I'd sort of hit the end of the cycle there, and especially the excitement that was sort of in that industry.
I feel like a lot of people share the trajectory that we've had. I know a lot of people who've moved from telco to payments.
Absolutely. Well, I remember my interview process with WorldPay, and I remember going over to the UK and sitting in this booth, and there was a whiteboard with these bubbles and lines being drawn between them. And I thought I had to sort of look again to see that I was actually in payments and not in telco, because it was almost the identical drawings that I'd just come from. but there are similarities.
I'll tell you a story about my first day at WorldPay. This was before you joined, right? I was sitting at the back of a conference room and we were having a call with the headquarters here in London. And I think because there was so much jargon and I had no idea what people were talking about. I was coming from a world of advertising where the acronyms would be CPM and CPC, and then started going into things like MSC and whatnot. So I couldn't understand it. I fell asleep at the back of the room. And then I got called out by whoever was on the camera in London. It's like, is there someone
Oh,
sleeping
no.
in the corner of the room?
Oh,
And
Jade.
I'm like, oh, wow, this sets me off on a fantastic trajectory into payments, which more than a decade after I'm still in. So
Still within it, yes, indeed. It's definitely had some of that in telco. I'm not sure I ever fell asleep, admittedly, but definitely telco at the start, was full of acronyms, and I think it's a wonderful mask to put over some of these things to drive that knowledge and expertise and value that you get from it. But payments is very nuanced like that as well. It has its own sort of acronyms that you have to learn, and that was probably the first thing that I had to do was try and learn. I always remember one of our colleagues, sort of said, "Stuart, you now know enough for you to be dangerous." I thought, well, that's all from coming from you. I'll take that as a as a compliment.
So from WorldPay, you found yourself in a startup that you founded. How is that transition from big corporate coming from the WorldComs and the Vodafones and the WorldPays of the world into starting from scratch, really, and seeing that to fruition?
It was an incredible journey. Actually, sometimes I look back and think, I don't know how I did it, in fairness. And it wasn't just the work style, it was actually the personal aspects, I think, that were probably the biggest challenges and changes perhaps in life. I've always sort of worked in growth areas anyway, even if they were big companies. Vodafone, for example, was, of course, a massive, massive sort of company. But I was based in a market which was a growth market for them. It was a small office at the time. And there was a lot of hustle around, sort of growing. So it's actually quite sort of startup orientated. But moving into a proper startup, I think, where we really created something from nothing, that was a big shift. But I think if you've got that mindset, I can never really say it was necessarily hard at the time by virtue that you just did what you needed to do to get there and you just adapted. But I think it takes a certain type of person, or sometimes they say a certain type of craziness, which is probably about right, to go down that path. And it was very much like that, but it was almost seamless of sorts. The some of the groundwork over the weekends, for example, had been done already, and ultimately it was very much around, again, just hustling and selling and creating something and building something, which is ultimately, when you're in a commercial roles, you're always doing that anyway. So it was just another opportunity, to do that, albeit that there was a lot more freedom and a lot more ambiguity and a lot more uncertainty, and you weren't given pitch decks or ways to sell or anything like that at all. You had to make it all up, yourself, which was part of the fun and part of the excitement and part of the challenge.
Talk me through what the genesis was for the idea behind that startup. You partnered with someone that we've worked with as well, albeit he was out of WorldPay by then. But how did you find that opportunity and what made you guys decide to jump ship?
Yeah, I think first and foremost, I think rewinding slightly, personally at least, I've always wanted to do something, like this. I think it's always been a niggle or an itch, that needed to be scratched. And so the feeling and thought was already there. But I think the important thing in doing something like this is to, um, it has to be big enough to be worth the sacrifice. It has to be of certain scale. Otherwise, it's really difficult to sacrifice life, family, etc. around that and bring them on that journey if you're not going to ultimately create something of real value as a result of that. And so that was always, guess, the sort of starting point. How it really came about, first and foremost, you were sort of involved somewhat, obviously in the WorldPay space. There was a lot of merchants ultimately saying, this is great what you're doing from a payments perspective in terms of optimizing, our business, which WorldPay did, incredibly well. But how can payments actually drive revenue and sales for us? And it was differentiated, positioning, and we could offer some, very sage advice based on obviously our experience and expertise, whether that was broadly in payments or vertically driven by, retail or digital content. We sort of structured the team, but it wasn't, comprehensive to the point where you could actually really say, right, this solution is going to go and drive that value. So there was that as a sort of a demand angle, I think. The second piece of that was actually came from Klarna, launching with WorldPay in Europe, and that was a big part of one of the wins that we'd had. It was a good big fintech, there was obviously doing very well. There was a lot of volume, and I remember actually the moment where I was asked to go and do some PR for it over in Asia, and I said, well, what's the point of doing that in Asia? Klarna aren't here. There's very few Asian businesses, at least at that time, that go over to Europe to expand. If I'm going to spend my marketing dollars and our advertising PR dollars on presenting something, it's going to be something that we're really good at, or at least part of the focus, from a strategy perspective for WorldPay. And so I pushed back on it because really the only product we had here was credit card installments, which is a very differentiated product, really. So that was the second thing. And really the third thing was probably realization, I think, that the market was changing quite significantly. When you look at the cultural elements of Asia, especially in Chinese culture, it's very much, you save now and maybe don't spend at all. Storing money is very important. In fact, our first brand name for the business was actually, as we found out, if you actually translated it in Chinese, actually meant something like that, in a negative way. So that's why we moved on from the original brand, which was quite funny at the time when we found that out. But it was really seeing the consumers, really that sort of millennial 18 to 25 to 30 consumer group. They weren't being influenced per se by by the sort of parenting or families anymore. They were being influenced by social media. This was predominantly sort of Facebook and then Instagram. It was this, I can see this now, my favorite person or influencer, for example, is wearing this, doing that. I want to do that too, and I want to do it now. And off the offshoot of that as well, which was quite interesting from a WorldPay perspective, where we used to do all these, great reports, was, across Asia, you saw that consumer base using debit cards, for example, predominantly because they didn't want to get into debt with credit cards, like the parents or families had done in the past. And so when you take those three things together, one, you've got this idea of a business model, which was also growing considerably well in the Australian market. With Afterpay, for example, you had, this demand from a merchant perspective, and then you had the customers, the consumers ultimately the ones that would be using this. It was like, wow, what a great opportunity. Why aren't Klarna doing it? Why aren't Afterpay here? Well, who am I? Well, I've got a bit of payments knowledge by this point. Why can't I do this? And that's really where the starting point was in terms of trying to go down that path and start creating the idea and getting to where we've been.
I'm always fascinated with the story, the drive, the tenacity behind startup founders actually going from idea to making it live, right? So not necessarily just saying like, oh, I have a startup idea, this is a viable business, to actually making it a viable business. What were the steps that you took from bringing it from the drawing board to
Yeah,
actually
absolutely.
launching the business?
Good question. Well, first, the drawing board, if I remember correctly, was this 90-page document that we'd written, basically, which is this is how we're going to run this business, which was probably completely overkill, but it did give us the opportunity to go and explore all the ideas and thoughts that we had around what we wanted to do. But back to perhaps the specifics. So one is to really validate, is this an opportunity here? Really, are those consumers seeing now, wanting now? Are they stopping buying now because actually it would potentially help them to pay later? So there's the consumer angle that we needed to test. We also needed to test the merchant side, and I remember a friend of mine at the time was the guy that had built Lazada. He was a very useful feedback loop for us. He gave us a letter of intent, which helped us to fundraise our first, investment, which is incredibly, sort of valuable. And really, it's about testing those components. Can we build it? If we build it, what does it look like? If we build it, what does the model look like? And then you've got that typical market analysis around how do the consumers get paid, for example? Is that going to make a difference? Fortunately, we had a couple of really good examples where we could borrow for some of those some of that thinking, and we really used those as the validation points. So to a point where there was enough validation, we thought we had a good model. We thought we could probably build it. There was definitely things that we needed to think through in a bit more detail, but that was the starting point around putting that together. And Darwin, obviously co-founder that you alluded to, he was incredibly good, I think, in the depth of the details. And together, I think that's where we really were able to put that together.
Tell me how you guys started acquiring your first merchants and customers? How did that process come about?
Yeah, I mean, the first one, which actually was the validation for investment, was a good mate of mine, and I'll say it quite transparently. I used to play a lot of tennis, and he ran a tennis shop and a tennis academy. And he loved the idea, and basically gave us the keys to his website, and we were able to test and prod and see how these things worked. And that really was the first one that gave us the opportunity. I mean, when you're doing something like this, and probably always in life, you're always talking and selling anyway. You're always sharing what you're trying to achieve, and you get that sort of, it's a way of getting that feedback loop back into what you're doing anyway, to validate the idea, and perhaps even from a personal perspective, that you're validating that there is something here that is worth really taking your time to go and invest all that time into doing it. And so that was really the first merchant. But then when we started to go through fundraising, you needed to have a pipeline of sorts to show that this wasn't just one client, that there was demand out there. So using obviously people that you knew to get that feedback. That helped us ultimately to get the actual investment, the first investment. But the real pressure ultimately was when you really had to go out there with that money in hand. Now we've got to go and build a business. And I remember the very first customer that we engaged, and it was a furniture store here in Singapore. And I went to see, I think it was their chief technology officer at the time. He was one of the co-founders of the business. And I mean, I think I've still got the copy of the deck somewhere, but it was hideous. It was absolutely appalling. I'm embarrassed to even look at it now because of how bad it was. But I think it was super valuable because it did articulate what we were doing. There was a lot of commitments, perhaps, that we were borrowing from someone else that might have done it somewhere else in terms of what the outcome was going to be. But it resonated. It resonated with them because ultimately it was doing something that they needed help to. And, that was really the starting point. And of course, once you get one customer, you use that as a proof point. We've been there. You can start to sort of use that as an example of where that value sits. And the more value that we drove for clients, that tangible value, the more that we were able to use that, the more they became referrals for us. A lot of the people that we worked with in the first, sort of 6-9 months, some of them are really good mates by now, purely off the back of what we were able to do for them personally, and of course the company as well. It was incredible.
Out of curiosity, what was the initial positioning or GTM behind that deck?
Yeah, I mean the focus ultimately for retailers and e-commerce companies to grow revenue. I mean that was clear positioning using a payments sort of module that would help their customers to split their payments. And by splitting that payments, it gave them the ability to, I guess, either feel better about it or afford the item that they wanted to buy. And we were doing this in a way in which was very responsible. Actually, our buzzword at the time was responsible affordability, although we realized that wasn't really very relevant from a consumer perspective because people don't so much care about responsible spending. They just care about the spending itself. But from a government perspective, it was very important, and we kept that as something that was very important to us in terms of how we structured sort of technologies. Now, that was the starting point, and it kind of evolved over time, most definitely, because it had to create value, trying to create stickiness, trying to create competitive advantage, perhaps building a moat almost around the business. And so it became something a little bit more, but it was an incredible starting point because it did what it said on the tin, and that was the fun bit.
Nowadays, buy now, pay later isn't a new thing globally anymore. Back then it was. I know working, say, in the Brazilian market where you had installments that have been around for forever. And in some markets as well, it's kind of standard, right? But it was really the likes of Klarna and Afterpay and you guys that made it mainstream as a payment method around the world. How was that response from an ethical point of view? You mentioned dealing with governments. I'm sure there's a lot of regulation or a lot of people within different governments who started waking up to the fact that this is now a new payment method that wasn't as regulated as others, and that it could potentially be something that consumers might lean on too much and potentially have detrimental consequences.
Absolutely. It's a very broad question to cover because there were so many different components that we had to think about and different parties perhaps that were involved in that. So if you break it down slightly, you have government and those responsible for governing not just payments, but also obviously the financial elements. Typically, they would only license or regulate when that financing option is so pervasive, in the market that it has or can have a noticeable impact on community and society. And, back then it had nothing. It was it was really only sort of started to be seen in those markets, and it certainly wasn't sort of big enough to go and warrant that view. Of course, now in Australia, for example, it's such a significant payment option for everybody that it's a super important sort of make sure there is governance around it. What we did with those guys is actually to engage them right up front. We had meetings with the Monetary Authority of Singapore. We engaged our legal partners to make sure that we were operating in a way in which we were within the realms of compliance or regulatory compliance. And you read some startups that go, "Oh, don't worry about it. We're just going to go hell for leather and we'll worry about that later." But when you're dealing with people's money, it's a slightly different situation. And you can be put in prison, for doing such things. So we had to also be thoughtful, not that we did it because we didn't want to go to prison, but we did it because it was important for our business to make sure that we were compliant from the off, to make sure that we were building something of value that could stand on its own legs, from a compliance perspective. Actually, in Singapore, subsequently, really the only element of compliance that now sits is more on having a payment license, less about sort of a regulatory view on what buy now, pay later actually is from a licensing perspective. The payments license was important anyway for payments within, the market itself. I remember actually when we went into Malaysia and we were launching, and their credit or installment rules were really based around credit card installment products, or those installment products that you get, when you go and buy furniture or something like that in store. And it was completely unfit for what we'd built. And actually, it was our legal partner that helped us to manage that and make sure that we sat within the rules, which was, incredibly important, again, to, make sure that was the case. And again, we engaged, with the regulatory bodies to make sure that we told them what we were doing and why we were doing it. The second piece actually is quite interesting, relates obviously to the consumer. And the irony is that, and I'm not sure a lot of people know this, and maybe this is a controversial piece, but credit cards, the reason why banks have credit cards is that they are a massive revenue earner, because you have an compound interest rate sort of sitting on these products. That's how they drive money from these types of financial products. They make sure they want you not to pay because that's how they earn. Whereas from our perspective, we weren't charging the consumer. It was the merchant that was investing in the ability to go and drive that transaction. And so ultimately, it was the consumer that was being looked after, because actually we had a capped disincentive to pay back on time. So this was not a compound position. So actually, if they bought something, it was limited to what they'd ultimately bought, with a disincentive there really to get them to pay. So it was a slightly differentiated, position. The other thing we did is we were actually very careful with the technology infrastructure. So typically when you're letting your cohorts of consumers coming through the platform, we had rules in place to make sure that certain consumers could only do certain things. For example, you didn't want an 18-year-old buying a $2,500 phone, because that was potentially, too risky from our perspective, and probably too risky from a responsible spending perspective for the consumer. And we had them all inbuilt. Sometimes literally to the detriment of our own revenue growth, because we were looking after the consumer in doing so. And then probably to the merchant, it was obviously important for us to make sure that we were also aligned to regulatory and government, because ultimately, they were using this tool. I think when they started to see the outcomes, perhaps they started to forget about that stuff because it was driving them so much, business. But our risk, our consumer defaults were so low. It's like less than 1%. This is significantly lower than any credit card. And so from our perspective, I think, there's what's out there in the press, and there's out there in reality. There is a way, I think, of running this in a, very, responsible sort of way. And that's kind of what we set out to do. In fact, so much so that I remember our first investor, when we met him, he was reluctant somewhat around the business model. And he said at the very end, because we had on the third slide on our investment deck, it said responsible affordability. And he said, if you didn't have that, I wouldn't have invested. I wouldn't even taken this any further.
So you mentioned that you guys moved from Singapore into Malaysia. How many markets in total did Hoolah get into?
So technically, we launched in 3 markets physically, but we also were, well, actually, we launched in 4 in total because we had Thailand as well, which technically went live. Philippines, we were very close to the launching. We had all the business set up, but ultimately, when we exited the business to Shopback, that was on pause because it was a priority at the time. So that ultimately was shelved. But we researched every single market, across Asia. We had plans for the majority of them. We engaged in some M&A activity, for example, in Indonesia, which we nearly bought a business down there in that space, which would have been quite interesting, although somewhat fortunate that we didn't by virtue of the outcome.
You've been in the payment space in Asia for well over a decade, and you've seen the transition between different technologies. Also, going into what you're currently doing today, you've been in the last few years advising a lot of startups and quite a number of them within the payment space, right? So, can you walk us through how the current landscape is for payments in APAC, as well as e-commerce, and what makes each market unique to each other?
Crikey, well, I think you've answered the question already with that last statement. I always remember, number one, obviously, I'm coming into payments with no prior payments experience when I first went into WorldPay. And so this world of card acquiring was completely new to me. And I always remember sort of looking at this Asia Pacific market and go, my goodness me, what is it? 3 billion people or whatever the number is living here. And this is just going to be huge. What a great opportunity. And perhaps that's also a view of a lot of people that haven't worked in Asia. And I guess I had the fortune that I traveled and operated and worked, across the whole of the region, prior, albeit in a slightly different sort of industry. And when you realize, that Asia Pacific is a very different geography to what you might see in Europe, that's really I think the starting point from a payments perspective, because Singapore is quite a, card heavy market, at least traditionally. And then you look at Indonesia, for example, that isn't at all. There's your first difference already. I think when you sort of see some of those perhaps more emerging markets driven perhaps by consumers that are potentially unbanked, how do you bank them? Or you give them a wallet, for example, where there's a degree of sort of stored value perhaps that they can effectively put into these wallets. And then how do you make these wallets valuable? Well, you give them a utility to actually spend with it. So all of a sudden you've now got a wallet that you can actually, not just keep your money, but actually spend with it too. And that's really, been, I think, the driver of the Asia Pacific payments landscape, especially in those markets like sort of Indonesia, Philippines, some of the Indochina, countries, Malaysia to a degree as well, I think. Singapore, perhaps less so. Interestingly, I think, when you look at sort of some of the verticals as well, there's some, variances. The cross-border can be quite significant in sort of some of the digital content or airlines industry, for example, travel. Retail, I think, is more sort of domestically, driven, where, still 90% to 98%, I think, is the sort of rough statistics that I last read. It's still basically spending at the till in store in Asia, which I think when you look at the US, for example, where you're now seeing these sort of mega malls closing down because everybody's buying online, it's not necessarily happening here in Asia quite as much. In fact, if anything, malls are, still being built and grown and added to, et cetera, et cetera.
As
So
someone who, sorry, as someone who grew up in one of those countries, primary reason why we went to the mall pretty much almost every day, if not definitely during the weekends, is because it is the best place with air conditioning.
yes, exactly. Yes. There's that as well, which is sort of an often, I'm not sure, necessarily everybody understands that or knows that as a reasoning, but it's definitely here. I mean, you walk around any shopping center at the weekend and it's packed with people. It's food, it's community, it's air conditioning. And of course, that with a bit of shopping as well, and that retail joy. So it's interesting then seeing how that sort of prevails into the sort of payments, landscape as well. Of course, you're starting to see, and this is sort of jumping around a little bit, you're starting to see new technologies with things like, crypto, for example, stable coins, playing a role. We saw that in the Philippines, for quite a while, especially in gaming, which sort of which was popularized almost because of, sort of certain gaming communities, although I think that's died off a little bit. the sort of stable coin capability around, moving money, cross-border, for example, is a really interesting technology that's starting to really pick up some speed as well. Remittance is a huge space, it's still payments because ultimately you're moving money from and utilizing that cash. And you've got those key corridors, of course, because of the movement of labor and the movement of people, which is fascinating, I think, to, track that. And interestingly, as we maybe double back to, the telco conversation, but literally, you look at the telco map of where minutes are being sent or text messages are being sent. It's literally identical to how money is being sent as well, because it's exactly the same people that are calling and the same people that are sending money. It's absolutely fascinating. So it's another thing that, hasn't really changed at all. There's the sheer volume of, and which countries are doing business with, which countries and why, which is really interesting. So you're sort of seeing a lot of that happening. Obviously, then you sort of start to go into things like consumer versus, B2B. Consumer funding is quite interesting. I think it's often called embedded finance these days. So, e-commerce payments, companies like Stripe, for example, is an embedded finance. Hoolah was an embedded finance consumer lending product. But the B2B space, I think, is an incredible opportunity that's, perhaps not been tapped properly because of the sort of sheer opportunity, I think, and the size.
There you go. So I think you touched on something at the end there where you spoke about the B2B landscape, which is currently where you are operating today. And uh, also, it's a fascinating technology where it's using some of the previous experiences that you had from a buy now, pay later perspective into what is not traditionally the market for it, which is in B2B payments. So tell us a little bit about what you've been up to for the last few months and
Yeah.
how is that changing the way that people are starting to view payments within the B2B space there?
Yeah, it's an interesting one. I mean, so I've been involved with this company for 2.5, 3 years, whatever it is now, as primarily at the starting point as an advisor off the back of the buy now, pay later experience. That was really the intention that they set out to achieve, within the business. And over that period of time, it's probably shifted slightly. Buy now, pay later in the merchant space or B2B space is quite different to consumer buy now, pay later for a host of different reasons. One, when you're doing a B2B transaction and you're assessing the risk of that transaction, typically the transaction's a lot greater. So that's important, which means, the funding that you need is a lot greater as well, which is a little bit harder to get access to. But also when you're doing that risk assessment or looking at a company, when you're doing that from a consumer perspective, there's a person, there's a behavior that's ultimately involved in that transaction. Whereas with a company, it's they're buying probably something that's important to the business, but there's also things like profit and loss and balance sheet, that can come to play. The sort of health of the business related to the people, the directors that are involved within the company, and typically that data sits elsewhere. In bureaus, for example. And it's a much harder place to play. But the interesting thing, and this is what we did get from running Hoolah, the number of merchants that used to say to us, "Can we go and use this for our own transactions?" Because to be able to go and split that payment over a period of time, it's really interesting to us to be able to do that. And why? Well, it's cash flow, because every SME struggles with that. It's hard, especially in retail, because you've got seasonality that comes into play. You've got things like stock. You've got how they work with marketplaces, Amazon, for example, which gives them, significant channel exposure for their products, but ultimately holds, what is it, something like 15% of their sales, and pays every 2 weeks. That's going to impact your ability to then go and reinvest, that revenue and profit back into stock to help you grow. And so I think that was quite an interesting driver for me to go and join the business on a full-time basis when they sort of asked me to come on board. I think primarily they spent a period of time testing the market and building this fantastic technology and product. But really now is the opportunity to go and put a strong go-to-market in place to drive and create a revenue function to really sort of multiply that the opportunity that we've had. And that's basically why I sort of came in. Plus the fact that it's an opportunity in a space which is just so underserved. Every time I read something, I was at the Singapore Fintech Festival last week, and the first thing last year, sorry, and the first thing I went into, the first panel that I went into, it was literally on this subject, and I'm like, wow, I mean, this is still hasn't been solved, and typically it's been underserved because of one, risk and technology and data and how you can use that to go and assess risk. And two, because they're underserved, there's this opportunity to be less than transparent in terms of the commercial offering, not only because perhaps they're underserved, but perhaps because there's just such a massive degree of illiteracy, if that's the right word, in the industry. How do you know your difference between an accounts receivable or working capital loan? You've heard it being used. What's warehouse financing when it's at home? And your average retailer will not know what that means. And so there's an opportunity ultimately to go and serve them properly. And that's really, I think, where I came into the business with this really clear opportunity, I think, of how we can do that.
And the company is called Credilinq.ai, right?
That's
And
correct. Yeah.
so if you were to give like a 2-minute elevator pitch, there's a lot of retailers or people within the retail industry listening to this who might be like, oh, that's actually quite interesting, especially if it's a completely new premise, completely new technology that we could take advantage of.
Is this where I look into the camera and pitch? um, so the real pitch really sits around the fact that we're able to give retailers, specifically at this time e-commerce companies, access to funding for their businesses to help them to build, to grow those businesses, to scale them, depending on where they're at in their journey. And the real differentiator really is around utilizing a performance data, so transactional data from the ecosystem that they work with, so marketplaces, accountancy platforms, e-commerce platforms that they might use, perhaps payments companies that they sort of partner with. And we use that data to assess their previous and future potential performance. And the difference is that makes a big difference is that when you go to a bank, they might offer lower, but again, there's the issue around one, capacity, and two, the amount of data that they use or the data that they use to go and assess that risk. And typically it's focused at the balance sheet value. Like if you buy stock and it's worth $1,000 and you've sold half of it, there's $500 worth of stock sitting on balance sheet. That's what gets assessed for risk. They'll only ever lend the amount of capital to the assets that sit in your balance sheet. That's kind of how they work, right? That if we lose this, at least we've got that as an asset that we can claw that money back. Whereas what we look at is really the ability for that $1,000 ultimately is being sold, and that's what we're looking at to ultimately assess risk. And there's a whole number of other data points, but we don't need bank documents. You don't need to use that. It's really using your whole ecosystem to go and assess, your access to that, which means greater capacity, which means a greater cost position from our perspective, which means, and this is probably why we're doing this, but differentiating slightly, but it's on complete transparency, right? There's no hidden fees in anything that we do. So when you look at all of those things, there's speed, it's transparency, it's competitiveness, but ultimately it's really differentiating the way, which we're using data and their data to go and, help them to go and, grow their businesses.
And I guess for me, one of my final questions would be, you mentioned ecosystem, right? Something like this is very dependent on an ecosystem of not just the merchants and the consumers, but also the companies or the entities that give you the information to be able to assess that creditworthiness of that company. So how do you go about building that ecosystem from scratch, really?
Yeah, absolutely. So, the first thing that we've done really is to have our first starting points from a data risk perspective. So, we've historically built out into Amazon and TikTok. So, if you're a seller, for example, sitting in Singapore, you can use your Amazon performance anywhere in the world. So, whether it's the US or UK, Australia, Singapore, whatever it is, and which is great for cross-border e-commerce companies as well, which are often underserved, I think, in that regard. So we've built those first couple of connections. We've also just added Lazada, about to add Lazada, for example, in Singapore, if Shopee, for example, too. And that basically gives us a starting point ultimately to go and engage those customers. We'd call them integrated partners, i.e. that we're able to build out our API into those partners. And as I've learned, talking to Amazon directly, it's quite a feat actually to have actually built this API out into Amazon because they have incredibly high standards. In fact, I think we're the only one in Singapore that's actually been able to, achieve that, which is probably relevant to the technical capabilities that, within the business itself. But then ultimately it's around getting to the sellers themselves. And so that really is around that community and that ecosystem that we're building. And that's a multitude of different partners, from e-commerce enablers to logistics businesses to other consultancy companies to point of sale businesses, et cetera, et cetera. And that's really what we're focusing on building at now. And the value of doing that here as well. I mean, Asia really is a place where partners make such a big difference, because there is a degree of trust that ultimately it needs to be created. It's that building that connection with people. If they've already been built somewhere else, it's incredibly valuable into the end seller as well. And so that's a big part of what we're doing and how we're positioning it.
Amazing. So if anyone wanted to avail of this company's services as well as contact you, where can people find you and Credilinq?
I'm everywhere on every communication thing that you could possibly think of. Unfortunately, it's a necessity of life and business these days, especially in Asia, because you match your payment system probably with your communication app. And LinkedIn's a great place for me. You can see the website as well. We've got everything on there. I think there's a new version of that coming live tomorrow as well, which is Thursday, 19th, 20th, whichever day it is. Yeah. So that's going to be sort of really interesting to sort of see. And listen, if there are people out there that do want to get access, we're here to help. We'd love to hear the feedback as well as anything else. We're in that stage where we're listening intently to customers to sort of tell us what they need and what good looks like. And of course, we're sort of willing to make those changes at this point to go and create that value for the SMEs.
Which markets would those companies need to be in?
Singapore today in terms of the entity, but that means also that they're selling internationally as well, because it really is just the data that we're collecting in terms of the total sort of sales transactional data. But we'll launch very quickly into a number of markets where we have the ability and infrastructure already in place to go to countries like Malaysia, Hong Kong, Australia, UK, the States. It's really just focus for us at the moment.
Thank you so much, Stuart. I'm really excited to see how this goes. I think it's something that a lot of companies around the world would probably be benefiting from. And there is definitely a space in the market for it.
I think so. And the more I look at it, I mean, I've even experienced it, and perhaps this is a loop back to someone in the start of the conversation. I've been an SME in effect, where we'd raised a lot of money, and with the struggle to open a bank account, the struggle to get access to a debit card. We could never get access to a credit card, even though we had significant millions of dollars of investment sitting in the bank because of the rules and regulations that a bank puts in place. And actually, a lot of the other digital non-bank lenders, ultimately, just because it's a digital front end, it doesn't mean that actually they're using this technology. And that's really, I think, where I think this technology is going to make a massive difference. And of course, you don't sell the technology to the company because all they really matter is about, again, speed, price, et cetera, et cetera. But this really gives us the ability to increase that capacity to borrow and get access to more funds legitimately based on the success of the business rather than be limited, what sort of traditional funding partners do. And I think that's the exciting thing, because it really is making e-commerce and retail get another edge ahead to help them grow their businesses.
Great. So this was another great episode. Evolve Voices is a podcast from Evolve Commerce Club, the #1 private community, where we connect senior commerce professionals in more than 40 markets. Every week, we invite one expert to share their perspective and their knowledge. If you want to know more about Evolve, look at the link in this episode description to request your invitation. I hope to see you in the next one. Bye!